All right. Good afternoon, everybody. I hope you are doing well. I hope you had a great weekend. I hope you're ready for a new week, right? So, markets had a reasonably good week last week, with the S&P's finishing up 4.25%, and the Nasdaq almost 4.5% from Friday to Friday. So got a good little run up. I'm not gonna hold my breath though. It's a bear rally here. I feel like we're still gonna come back on down. It's just a temporary kind of like a relief rally. So play a little bit to the upside, downside, and sideways side, like we always do, but just keeping tight stops on the bullish plays just in case. All right. So the first one that I'm looking at is gonna be CrowdStrike. I mean, as you can see here, CrowdStrike really came in from its 1 year low, and actually this trend line's now off a little bit here. It broke a hair, but it's changed a little bit. Let me just try this one more time. Okay. All right. So yeah, it did kind of break. Still holding for the most part here. Right there you go. All right. So it is holding this trend line from end to end. Not too bad. Bounced right off this trend. And we're back above the 50-day. There is a negative squeeze on it, but I feel like that came in from this and we bounced a little bit and it hasn't had time to change over yet. So as long as CrowdStrike is trading above this 50-day moving average, then I like it to the upside. It's going to have like a double top resistance area here that's going to have to break out of. But even then, that's about $10-12 away, those 195, 196 area. Okay, and then from there, it's got run room to 200, and you want to see that break out. Okay, so you got higher lows here and higher highs. You want to keep this going. So with CrowdStrike, I was actually looking at, because I just deleted it, but it's going to be the, not 160s, but the 165 put spread right at the support level here. Okay, so you have a little bit of a support range right around here. So looking at 165 to hold this triple bottom and look for this to break out above the double top. Okay, so on CrowdStrike, September 16th monthly, 165, 160 puts. They are a little wide, so I would probably start at $1.40 and see if I got maybe price improved on this fill. Okay, good 65 pop, 140 bucks if that's the case, for $360 in a max loss scenario. Lines up all in all fairly well for a nice vertical spread. Okay. The next one is gonna be Google. This one is GOOGL, not the GOOG. But I'm looking at Google and I like it long. Again, same scenario, as long as it stays above this 50-day. Now, it did have a really good run up from earnings. Think about it. It closed on earnings and finished up about, what is that, just over 11% run. 3 straight days up, but we are seeing some upward momentum come into it. I would not be surprised if maybe it pulls back to the 50-day and then continues this run up, and bless you guys, finishes this run up and breaks out of this resistance level. That's the idea I'm looking for, whether it's a pullback, bounce and run, or heck, the momentum just keeps going, pushes through this 120 resistance area and off it goes. So this one really, while it's got a 30 IVR, is not a lot of premium in it other than selling it naked. So this would be an undefined risk play. Looking at the 102.5 puts, pretty much down at support. Okay, you can see the support level here right around 104 to 101, and it's going to give you a lot of wiggle room. Okay, so when you take a look at Google, also in September, coming way down here, you're going to be 107s. You're going to be about $5 past the expected move. Getting the 102.5s for like $1.10, about a grand to put on, and an 88 pop. Really good play. Now, unfortunately, there's not enough premium in this to get it reasonably defined. You go to a 31 delta and you go here, it's only 23 cents. That should be about 33. This should be about 66, 99, and you can see it's off by 20 or 30 cents. There's not a lot of premium for a defined risk play. Okay. You would have to come up a little bit. You'll always get a reasonable credit for the width, but it's just how aggressive you want to go. And right now you can see a 112, 111, $1 wide finally gets you enough credit. The 34 delta, it's not bad, but I definitely don't like going that high. And those 112s are way too close for my liking. So this would be just an undefined risk only at the 102s. Okay. Next one's going to be Meta. Previously was Facebook. And just been dropping. It really didn't do too good for earnings either. So you're seeing this nice light squeeze building up downward momentum. I want to see this to continue back down to the 1-year low. Let's see if that's a 2-year low as well. That is also your 2-year low as well here. So I want to see this break out of this kind of double triple bottom here and break out and have that run towards 150 and below. So I like it naked with a short call at the 190 area. Okay, you're going to be in this resistance level. You can see that right here. Okay, a little bit of resistance. And then defined risk, you can do the 175, which will put you right at that 50-day moving average, up above. You can see it here. This little resistance level. So you got some resistance to work with on this one. Okay, I want to see it kind of run on down. So I'll take a look here at Meta. Going to be September again, the monthly cycle. So the defined risk 175, 180 call spread right at expected move. Okay, 77 pop. Call us. Let's just call it $1.05 right now, because tomorrow's going to be different. This is Friday's close. 6 short deltas for $1.05. $105 for just under $400 of risk. Okay. Defined or undefined, excuse me, was these 190s right here. 12 delta, 90 pop, 12 short deltas. Let's call it $1.35. Well, that's actually the natural. Call it about $1.38, $1.40. Okay, you're gonna be about $10, $11 past the expected move. All right, $130, $140 for $1,600. It's a little high, but I don't mind that, especially for that pop. And then the last one will be the sideways play, slightly short skewed here, and that's Pfizer. Looking at Pfizer, you can see it has been channeling pretty much since January 1st. All right, beginning of the year, this thing has been sideways. Really not breaking out of the $55 range too much and not breaking out of the $45 range too much. And that's gap fill there. That's resistance there. So it hits and rejects, rejects. Kind of came back to the mean, rejected, came back to the mean, rejected, right? Falling back down. So I just want to see this continue to go a little bit longer. So I'm looking in a weekly for this one, just because this is what, 7 months worth of sideways. Eventually it's going to break out and move. So I want to go on a weekly, which in this case will be September 2nd, where it's only 33 days, and hopefully be out of it within 10 days. Okay. So the 45 puts, $2 past expected move at a 10 delta, and the 55 calls at a 13 delta. I would like to get at least 50 cents for that. That way, you know, 2 contracts, $700 of risk, of buying power, unlimited risk. And, you know, 6.5 short deltas with an 82 pop. You're still past the expected move. All right. And that's going to be it, you guys. That's all I got going for this week. I hope you guys enjoy your weekend. And maybe just one day we'll see you in chat. Take care, everybody.